세 번째 강연 소개해 드리겠습니다. GSR 마켓의 찬진 펑 매니징 디렉터님께서 The Present and Future of the Digital Asset Industry를 주제로 발표를 해 주시겠습니다. Let me invite up Mr. Chanjin Fong from GSR Markets, Head of Sales in Asia. Ladies and gentlemen, let's give him a big round of applause. 여러분 큰 박수로 환영 부탁드리겠습니다.
Test. That works. I'm going to do this one in English. My Korean is terrible. If you need a translator, apparently it's at the back over there. So I'm going to begin. GSR, my name is CJ. I run the Asia sales team for GSR. We're based in Singapore. We have a presence in London, New York, and across the globe. And who are we actually? GSR is actually one of the largest altcoin market makers in the globe. When we talk about altcoins, what we're talking about is cryptocurrencies other than your major coins. We're talking about currencies other than Bitcoin, other than Ethereum. If anything, if you were to go outside into the exhibition hall, and if you were to see a lot of the projects out there, that's what we would classify as an altcoin. So if we look at who we are as a firm right now, we're about 300 people across the globe. We have a span and a presence in almost 12 different countries, and we transact more than 100 million daily orders. We're integrated with 60 exchanges, predominantly outside of Korea. Korea regulation obviously is a bit difficult to get by, but we are integrated with your largest exchanges out there, so your Binances, your FTXs, your Huobi's, and the like out there. We're also one of the largest investing VCs in the space. Currently, actually needs to be updated, but currently our portfolio is more than 150 different cryptocurrency projects across infrastructure, across layer ones. So what is market making? And this is before I go into how it's evolved for the market. What is market making within crypto? It's very unique. If you were to look at traditional finance, let's say equities, so stocks which are traded on the Korean exchanges, how liquidity, how trading works is when all of the banks and security houses trade on the same venue. What this allows is it allows individuals like yourself to buy and sell the underlying stock. It's very different when it comes to cryptocurrency, when it comes to token projects. And the reason why is token projects list on multiple venues. When we say this, and I can give you an example, imagine you're a token project, ABC, and in the Korean context, you list on multiple venues, so Upbit, BitThumb, Coin1. Combining all of this together, there has to be a similarity when trading amongst these coins. The reason why is the token that we are talking about is what we call a fungible token. This means that every token is the same regardless of where I buy it or where I sell it. So because of this, what is the role of a market maker in crypto? Well, a market maker in crypto, our job is to make sure that users like yourself, if you were to buy and sell anything, you don't care where you buy or sell it. It is the same to you. This sort of function, it's something very unique to cryptocurrencies. You may think it's not as important, but imagine this. Imagine if today you go onto an exchange and you buy a currency. And the minute you buy that currency, it moves 10% in the other direction. What you are paying for is what we call in traditional terms, you're paying for slippage. When you do something like that, the experience of trading this currency becomes a very bad one, and you won't trade it again. A market maker's job is to provide two sides of the book, what we call the bid and the offer. This allows you to trade the underlying currency, the underlying project, and the underlying token. The way to look at a market maker's job is almost like the foundations of a house. Our job is to make sure there are enough orders in the book that you can trade comfortably in an organic way. What this does is it actually increases liquidity for both buyers and sellers. For projects, this is important. The reason why is for exchanges and projects, some of the most important things boils down to volume. A market maker's job is not to increase your volume. A market maker's job is to allow more people to trade your token such that the volume increases. This is an ethical approach to market making, and it's something that a lot of the cryptocurrency market, when it's very young, fails to realize. It encourages price discovery. And the reason why is when you get everybody transacting on the same location, the bids and the offers result in what we call the last traded price. This gives you the value of where your cryptocurrency currently trades. The most important thing, and this is something that's very unique to cryptocurrencies, and I'll give you an analogy for this. We all know Tesla, we all know Elon Musk. If tomorrow Tesla stock stops trading, let's say he delists Tesla stock, Tesla will still create cars. He will still have a business. He will still generate revenue and the world will still turn. In crypto, it's very, very unique because of how we link the coins on the blockchain with the underlying projects. Imagine for layer ones, imagine for Clayton, for instance, which is a very big layer one out here in Korea. If Clayton tokens stop trading within the ecosystem, the Clayton blockchain will die because there is no proof of work, there is no proof of stake. The tokens play an intrinsic part. This is why if you think about market making within this space, it is about creating the base layer for a project to build on. It is the first step. A lot of projects, when you start your journey into the startup world, always talk about fundraising. That's one aspect. The most important thing, though, is you need liquidity behind your underlying token so that when you build and when you evolve, and as your ecosystem grows, more and more users come into the space. The one thing about blockchain technology is almost like a democratization. It's socializing of the underlying at hand. So what we've seen actually over the last 2 years has been an increasing divergence between the nature of trading cryptocurrencies. We started off with what we call centralized exchanges. That's who you see on the sponsor banners for Busan Blockchain Week. FTX, Binance, Huobi, Gate, all of these are centralized exchanges. But what we have actually seen more recently has been the advent of what we call automated market makers. That's the curve that you see here. I'm not going to do math with you. It's a bit too early in the morning to do that. But this curve is a way to define a price based on a liquidity pool, so to speak. So when it comes to your market makers and it comes to liquidity providers, what should you look out for? And I think this is something that a lot of people don't grasp very well. A lot of people, when it comes to market making, only look at two things. They tend to look at volume and they look at price. The funniest thing is that this has got nothing to do with your market maker. The volume that trades is a function of how your marketing goes, how your ecosystem is growing. The function of price is where they determine, the market determines your price should be. What you should hold your market maker and liquidity provider accountable for are these three things: the spread, the depth, and the uptime. Spread refers to how tight the bid offer is, meaning if I were to buy and then sell, what is the loss that I'm looking to take straight away? This normally works out from anywhere from 25 basis points to 1% for a good market maker. The depth is how thick the books are when you market make, when you trade. This is important because if your book depth, and I'll give you an example, is only $1,000, but someone wants to trade $10,000, that's going to move the price significantly. So a depth that is commensurate with the amount of volume trading is very important. So a market maker who understands these things is key. The most important KPI you can ever have as a liquidity provider is uptime. Uptime is important because you will notice when books disappear, the cryptocurrency prices tend to get very, very volatile. So book uptime, what uptime refers to is how continuous orders are in the book for the underlying token that are placed by a market maker. So this is how you should look at that. So let's talk about a bit more interesting things, and this is the market itself. I'm only going to start from 2020 onwards. I know crypto has been around since 2013. We've been around since 2013. But I can say that from a social level, from a retail and a public level, 2020 was really where it really started. I'm looking past the ICO boom that we saw. What we saw from 2020 to 2021 was a maturation of centralized exchange infrastructure. Binance came out of the blue, started taking over. FTX took over the world. Crypto.com started marketing on the side of basketball arenas. It came to mainstream. And this is what was one of the first steps. The most important thing about that then becomes the underlying technology needs to improve, and it has. For market makers like ourselves, we care about the tech. We care about what we call transactions per millisecond. This has improved significantly. However, along with the bull run that we saw in 2020, 2021, we also saw an increasing number of projects getting listed. And unfortunately, a lot of these projects were not ready to go to market. This is something that I will touch upon later, what we think we're going to see going forward. But we saw a lot of this in 2020, 2021. We also saw an increase in the concept and the advent of what we call DeFi, decentralized finance. Decentralized finance, for those of you unaware, is nothing more than a transaction that occurs without a middleman. It's between two parties directly. And there are exchanges which do this. Uniswap is one of the largest ones around. PancakeSwap, Serum. What we saw in 2020 to 2021 was a massive uptick in volume in cryptocurrency markets. This actually presents a bit of a problem for a market maker. And the reason why is projects no longer look at the fundamentals of market making. All they care about is seeing the entire market going up 10, 20x, and they expect their project to do the same thing. This was actually, I wouldn't say it's a dark day of market making, but I would say it was a time where education couldn't come to the fore. 2022 has been an interesting year for most of us. Bitcoin dropped from 60,000 US and it's now trading probably about 20K. The last couple of months have been painful, to say the least, and increasing regulation and oversight is coming into the picture. The interesting thing, though, for a market maker is 2022 has been a fantastic year to prove what market making is all about. What we have witnessed in 2022 is a lot more of what we call layer ones coming out and realizing that they need market making. Warren Buffett has a really interesting phrase, and Warren Buffett, for those of you who are not sure who he is one of the largest investors out in the US. And he has a phrase which goes that you don't know who's not wearing any shorts until the tide goes out. We're seeing this now in crypto. And the reason why is during the bull run that we saw in 2020, 2021, so many people were trading that it created the natural books on the bid and the offer side for a lot of these tokens. And when I say tokens, I mean layer ones as big as in the top 10 even. What we have actually noticed, though, this year in particular, as volumes in cryptocurrencies have dropped off significantly, we have seen that the books are starting to look misguided on either side. They're not equal anymore. It's a lot of gappiness, there's a lot of volatility, and suddenly we are seeing a lot more inquiries where layer ones are suddenly reaching out, realizing that they do need someone to create structure for their books. We're also seeing the advent and the growth of structured products this year. Decentralized option vaults is probably one of the biggest things, DOVs. Guys like Ribbon, Fractal, Friction, they're all coming up and we're seeing a lot more of these coming to the fore. The market in crypto for options has been evolving, and it's evolving very similar to what we saw in traditional finance. There's also been the need in 2022 to integrate more of DEXs. As I mentioned just now, DEXs are nothing more than decentralized exchanges where there is no one putting in a centralized order book. It's really A trading with B and B trading with A. The one thing to take note with DEXs is that DEXs is still a very, very early stage part of crypto. There was a recent statistic which spoke about how minimal number of users there are who actually use things like Uniswap and SushiSwap. What you tend to notice for token projects is the minute that you get onto a centralized exchange, all of your liquidity moves away from the DEX into the centralized venue. This exhibits and this illustrates the direction that we're currently in for cryptocurrencies. So going forward, what do we expect? A lot of people ask me, and I've been on a lot of panels in the last 3 to 6 months, a lot of people ask me, when is the bull run coming back? When is the bull cycle coming back? The interesting thing I have, and I have something here for you all to think about, a lot of people say we are currently in a bear market when it comes to cryptocurrencies. I will tweak that statement for you. We are actually not in a bear market if you look at it holistically. If you divide up the nature of crypto, if you remove the aspects of cryptocurrency prices, you divide blockchain into two aspects, the price of the crypto and the underlying technology. The price of the crypto is in a bear market, I agree. But the innovation is continuing to happen. If we look out on the floor over here, outside in the hall, what we notice that people are still building. Projects are still coming together. teams of engineers. Korea is actually one of the strongest countries I've been across with regards to its developer community. Innovation is continuing. There is no bear market when it comes to innovation. If anything, what's happening now is projects are finally understanding that forget when my token price trades, build my ecosystem, find my users. I think what we're going to see going forward is the following. Regulatory oversight is coming. From a Korea perspective, obviously, they're very strict on giving out licenses for the exchanges. Very few have been given. And more of this is going to come. We're going to see frameworks which are going to come into play for different parts of the cryptocurrency market. Will DeFi be able to come up with a proper framework? Well, that's only time will tell. We're also going to see an increasing move towards being ethical and the right code of conduct. What we've noticed, historically exchanges have never really used outside market makers. They've always done it themselves. We are seeing a lot more exchanges reach out to third-party market makers. And the reason why you want to do that is so that it's an arm's length transaction. There is no conflict of interest. We are seeing more and more moving in this direction right now. We've also seen the removal of companies in the space who practice unethical practices. This is probably the biggest problem in crypto right now. The biggest problem in crypto is if you think about what the crypto market is right now, the crypto market is almost, I won't call it retail, but it's a social market. It's a market for the masses. The problem is to grow beyond here, what we need are institutions to come into this space. But institutions won't come in, not in its current form. And a large part of that is if you think back to the nature of your larger institutions. For instance, in Korea, if you think back to all of your largest asset managers, your largest security houses, the only time they'll come back into this space is when they see that the correct framework is available, when the concept of AML, KYC exists, when the concept of being able to work with regulators comes forward as well. We're going to see in this growth a combination of the two. We're going to see the social element of crypto continue. This is going to be innovation. This is going to be penetration. This is going to be dApps and layer ones, which are for the masses, for people. Asia is going to lead this to a very large extent, I feel. And the reason why, one thing that Asia has is Asia has underbanked, unpenetrable. And it has a lot of people who you need to reach out to. Countries like Thailand, the Philippines, Indonesia, they have users. So coming up with blockchain applications which can apply to them will probably be at the forefront of innovation going forward. On the institutional side, we are going to see more and more institutions coming into this space. It's very interesting. At GSR, we actually talk to a lot of traditional financial institutions, a lot of hedge funds, a lot of banks. In the current bear market or crypto winter for prices, a lot of these banks and hedge funds are not stopping their exploration of crypto. If anything, a lot of these institutions are laying the infrastructural groundwork to be able to move forward. A lot of these institutions are figuring out the very basics. How can I trade? How can I custodize? What can I do within this space? What this means is a very positive thing if you are a believer about the blockchain space in the medium to long term. It means that it's going to grow up, for lack of a better term. We're going to see this space mature. We're going to see people understand finally what it takes to survive in the cryptocurrency space. Now, if you're a builder, if you are a project, what should you be looking to do then over the next 6 months? Well, there is more than enough dry powder and funds. VC funds are still looking to invest on a very significant level in crypto projects. What you need to determine for your project is no longer about what is the next hype area. You need to figure out what is your niche market. Who are you trying to appeal to? And I break this down for you into 2 concepts. When you come up with who your target market is, look at it from a wants and a needs perspective. Who wants your product and who needs your product? If you can figure out that, you're going to have use cases. When you have use cases, this will slowly grow into an ecosystem. And as it grows into an ecosystem, this is where the value of that ecosystem starts to take effect. We're seeing it more and more in regions. I actually think Korea will lead the way in a lot of these. Korea is actually one of the largest when it comes to the GameFi sector in terms of the ability to churn out AAA titles. We're going to see more of this over the coming year, I feel. Most importantly, when it comes to your project as a whole and building as a whole, understand the fact that it is not a liquidity provider, a market maker's job to hold you where your token should be or sell you where your volume should be. Our job is to let people trade your token. Our job is to ensure it can be traded in size, speed, and accuracy. With that in mind, I come to the end of my presentation. Thank you.
네, 여러분 큰 박수 부탁드립니다. Thank you very much for your inspiring presentation. 네, 현재 크립토 윈터로 인해서 또 가상 자산의 하락으로 인해서 속상하신 분들도 많이 계실 텐데요. 사실 혁신과 기술 발전의 측면에서는 전혀 약세장이 아니다라는 희망이 넘치는 메시지를 전달해 주셨습니다. 또 이런 약세장에서 마켓 메이킹이 왜 중요한지에 대해서도 아주 설득력 있는 주장을 해 주셨습니다. 다시 한번 감사의 말씀 드리면서 다음 강연으로 넘어가 보도록 하겠습니다.